Hi, today we are going to discuss very hot topic regarding KSA VAT on import. If you are importing any goods in KSA, if you are doing business in KSA and handling import of goods or import of service, so this video is going to very important for you because here we will understand what step we will take on the importing goods in UAE and how to disclose in your VAT filing in KSA. This is very relevant. Here we will understand first of all this is a VAT return form in KSA. You can see here there is a four step for filing VAT return in KSA. First is instruction, second is taxpayer detail, third is VAT return form, final is summary. This is simple step you have to follow for the VAT return in KSA. But here we will understand the import of goods and import of service where we need to disclose in VAT filing. So you need to go in third step VAT return form. You can see here VAT on sale, VAT on purchase. Under VAT on purchase you can see there is a two box. One is a box 8 and second is box 9. You can see here import subject to VAT paid on import. And second important thing is box 9 import subject to VAT account for through the reverse charge mechanism. I hope you got it. This two important box you need to understand. Here we will understand via one practical real life scenario so you can understand how to disclose VAT on import in the VAT return. So first of all we will take first example. In first example, importing machine from UAE. One businessman who is doing business in KSA and importing machine from the UAE. So the transaction value is Riyal 100,000, which is shipped from Dubai to Riyadh. A invoice need to issue by UAE supplier because they are exporting goods from UAE to KSA. So invoice will be raised by the UAE supplier. That invoice will be zero rated because in UAE if you are exporting any goods outside UAE, that time that will be zero rated. But in KSA, what the VAT implication on you, that is RCM. RCM applicable on you. UAE supplier does not charge any VAT because that is zero rated. But you are KSA business, so KSA a person have to pay VAT under RCM. This is normal scenario. I hope you got it because here is exporter from the UAE and importer in KSA. So exporter is zero rated because in UAE exporting goods that is zero rated, but in KSA if you are importing any goods in UAE in KSA, that time you have to pay VAT under RCM at the time of importing goods. I hope this is clear. So next step we will understand how to disclose in your KSA VAT filing. So there is a very simple because you are paying the VAT at the time of importing goods. That amount, what will be the amount at the rate of 15%? That amount will be 15,000. Firstly, you need to inform box 8. As we discussed earlier, there is a form you can see in, you can see the box 8 import subject to VAT paid on the import because that person already paid VAT at the time of import. That time you need to disclose at the timing of VAT return. Here you, this box you need to select. So then you need to select box 8, that is a taxable supply subject to RCM. And second, what the, because you already paid VAT, but this is under RCM because this is not on you. So that's why KSA government due the relaxation under the input VAT. In box A, box 12, you need to you don't need to consider in box 12. Box 12 is automatically because whatever you mention the output liability in box 8, that automatically coming in your box 12, that is total input VAT on the purchase. You can see here in box 12 this is total purchase, means all the purchase transaction in which you paid the VAT, that time that will be clubbed here. So means important thing, you box 8 is very important for you. You need to inform in box X. Box 12 is automatically calculated on the scenario of from box 7 to box 11, that will be total basis there is coming ITC. So means the net cash impact will be zero. I hope this is clear for you. And next scenario, as we discussed in earlier, we will take two example. Let's take the example of importing service in KSA. There is a KSA electronics retailers receive a service from USA software company. If you are importing service from USA, in case at that time that transaction here, I take the example of real 100,000 per year. So invoice will be raised by which person? Not KSA person. It will be raised by USA company. USA company will raise the invoice SAR 1080. So RCM will be applicable on you in this scenario also, but you need to understand what box is relevant for informing your VAT return. RCM applicable on you. I hope you got it, since the service is supplied by non-resident, because non-resident supplying the service means supplying the service to KSA. That person is non-resident. You are the resident of KSA, means you are registered person in KSA under VAT. So that time you have to charge VAT under RCM. But in this scenario, because this is service, you don't need to pay VAT at the time of importing service, because at the time of importing goods you have to pay VAT at the time of importing goods, but at the time of importing service you don't need to pay the VAT, but you have to disclose under the RCM in the VAT return. In next slide you can understand how to disclose in KSA VAT return at the time of importing service in KSA. uh, for your information, output VAT 100,000 at the rate of 15%, that is calculated 15,000, that you need to disclose in box 9. I hope you got it. In box 8, if you are importing goods, you need to disclose. At the in the box 9, you have to inform when you are importing services from outside KSA. I hope you got it. The ITC is reflected same. In box 12, it is automatically calculated. Box 8, box 9, that is total input VAT, whatever they adjusted from your output VAT liability. Means this is automatically calculated if you are mentioning in box 9, that is input already covered in the box 12. I hope you got it. Net cash impact is also zero here. If you are importing goods in KSA or importing service in KSA, there is no any VAT impact on you, because only this is disclosure purpose, because at the time of importing goods you have to pay VAT at the time of importing goods, but at the time of importing service you need to just disclose output liability in box 9. I hope this is a comparative study I disclose here. Thank you very much, and for your understanding, I hope if you need any clarification, you can discuss here through the comment. We will reply on that. I hope you got it. Thank you very much.